The market is down pretty significantly today. Crypto's falling, stocks are falling, and I thought this would be a great time to go over what one of the best investors of our time says about market crashes like this. A lot of people are freaking out thinking that it's time to sell everything with a hawkish Fed, but Warren Buffett does not say to do that. He actually gives some really good advice. Whether you like him or not, he has provided huge returns. Just to be clear, his stock went from $50 in 1970 to $539,000 this year. I would be okay with a 10,000x on my portfolio over that same time span of 51 years, 52 years. Whether you like him or not, he has had great returns and he does have really solid advice. Now, I do want to talk about how you can make some free money partway through the video. I'll put timestamps underneath the video. Now, the first thing that he told us to do is to never panic sell a good stock. And I think this applies to crypto as well. Now, crypto is obviously a different beast.
Some people should not own stocks at all because they just get too upset with price fluctuations. If you're going to do dumb things because a stock goes down, you shouldn't own a stock at all.
No, I mean, what are dumb things? Selling a stock because it goes down?
Selling a stock because it goes down. I mean, if you buy your house at $20,000 and somebody comes along next day and says, I'll pay you $15,000, you don't sell it because the quote's $15,000. You look at the house or whatever it may be. But some people are not actually emotionally or psychologically fit to own stocks. But I think more of them would be if you get educated on what you're really buying, which is part of a business.
He says, never panic sell a good stock just because someone else is offering you less for it. Just like how he gives his example of a nosy neighbor, someone that comes over after you buy your house and says that they'll offer you $10,000 more for the house, or $10,000 less, or $50,000 less. Just because they offer you less money doesn't mean that you have to freak out and then just go off and sell it right away, right? You're using it for utility. You're using it to provide a home, just like you use a company to provide cash flows, or you use a crypto to provide future upside or utility. So I think that's number one. So many investors run from a sale. That's because people generally use stocks because they want to make more money over time, when they should be buying a company because they like what it does and they like the future cash flows that it will provide. Number two, seize the opportunity.
The biggest mistakes I've made by far are mistakes of omission and not commission. I mean, it's the things I knew enough to do, they were within my circle of competence, and I was sucking my thumb. And that is really, those are the ones that hurt. Big opportunities in life have to be seized. We don't do very many things, but when we get the chance to do something that's right and big, we've got to do it. And even to do it in a small scale is just as big a mistake almost as not doing it at all. I mean, you've really got to grab them when they come. Because you're not going to get 500 great opportunities.
There aren't that many big crashes. And that's something you have to keep in mind. A lot of people want to crash. When the market goes up, they want to buy at lower levels. It's a lot more dangerous to buy in a market like we had in 2020, late 2020, and then 2021, where the market just keeps on going up. And if you don't pay attention for a day, you'll lose out massively. So you need to seize the opportunity, because when you think about big crashes, we had 2000, 2008, 2020, and then right now. We haven't had a lot of big 20, 30, 40% drawdowns. And typically that's been a great time to buy, especially if you're looking for the long term and you don't have to sell anytime soon. Also, only buy things that you understand. That's number three, coming from Warren Buffett.
Ted Williams wrote a book called The Science of Hitting. And in The Science of Hitting, he's got a diagram, shows him at the plate. And he's got the strike zone divided into 77 squares, each the size of a baseball. And he says, if I only swing at pitches in my sweet zone, which he shows there, and he has what his batting average would be, which is 400. If he had to swing at low outside pitches, but still in the strike zone, his average would be 230. He said the most important thing in hitting is waiting for the right pitch. Now, he was at a disadvantage because if the count was 0-2 or 1-2 or so on, even if that ball was down where he was only going to bat 230, he had to swing at it. In investing, there's no called strikes. People can throw Microsoft at me and, you name it, any stock, General Motors, and I don't have to swing. And nobody's going to call me out on called strikes. I only get a strike called if I swing at a pitch and miss. So I can wait there and look at thousands of companies day after day, and only when I see something I understand and when I like the price at which it's selling, then if I swing, if I hit it, fine. If I miss it, it's a strike. But it's an enormously advantageous game, and it's a terrible mistake to think you have to have an opinion on everything. You only have to have an opinion on a few things. In fact, I've told students, if when they got out of school, they got a punch card with 20 punches on it, and that's all the investment decisions they got to make in their entire life, they would get very rich because they would think very hard about each one. And you don't need 20 right decisions to get very rich. 4 or 5 will probably do it over time. So I don't worry too much about the things I don't understand.
You don't want to buy something that's not in your area of competence because you won't know what to look for. You won't know what is a good valuation. You want to buy things that you understand. And that's something that I always talk about with crypto. Don't buy cryptos that you don't know anything about. That's really important because you won't know when to sell it. You won't have the conviction to hold on or to buy more when it's really important to do so. I want to talk to you about how you can make some money in the crash, but then I want to talk to you about some things that I find are really important in a crash like this. Now, before we go any further, I want to talk to you about Biswap. Biswap is a fantastic DEX that allows you to trade for 0.2% and get up to 50% fee return. So this is followed by 314,000 followers on Twitter, and they're actually real followers, like KuCoin follows them, along with other people that I follow as well. And they just announced a multi-reward pool program. Basically, you stake your BSW and you trade with some different pairs on Biswap. And what you can do is you can get BSW, Wrap BNB, and BUSD. I'll leave more links to this underneath the video too so that you can learn more about this, but this has a really high APY. You can also invite friends. You can get your referral link, invite the friends, and then earn crypto depending on what they earned and what they swap on Biswap. They also were recently at the Binance Blockchain Week in Paris, and they're giving away a car. Now, you can still get this. You can also still get a ton of money in crypto as well. They're going to pick the winner here just in a few days on September 30. They're going to be 40 winners. So to do this, all you have to do is follow Biswap on Twitter, Telegram channels, and chat. Quote or retweet our post on Twitter at Biswap in Paris. Tag 3 friends and Biswap official profile. Connect your wallet to Biswap and then read the Biswap article on Binance Academy and pass the quiz. They're giving away, like I said, a lot of different things, including the Mercedes-Benz, an iPhone 13, and a bunch of other things as well. You can also take part in their Biswap Space Agents program where you can actually get BSW. You can create content that they're going to post. So if you want to check out all this information underneath the video, I would highly suggest it. Get in on that free giveaway and maybe you'll get a free car. So first of all, I think it is really important to learn during a crash. Like when we have a massive bull market, you're trying to learn things, but everything moves so quickly. And if you miss out, it really feels like you miss out, right? When you miss out on a stock that went up 40% in a day or something like that. So this is a time where you can relax a little bit more and take advantage of actually being able to learn. Whether it's YouTube videos, learning about the wheel strategy. I talked about that in a video yesterday. It barely got any views, but I think it's one of the best videos that you can watch. Learning to do something like that to generate income in a safe way from the stock market, I think is really important. Or just learning how to invest in general or learning how to make more money. That's really important. Now, I've talked about that a lot, so I won't harp on it too much, but just keep in mind too, number 2, this crash doesn't really affect you negatively. If you are someone that's not going to retire in the next few years, this is a blessing, right? The fact that you can invest in stocks at a lower valuation, the reason that so many people are fearful is just because the market's going down, but it's really going down not because of long-term investors, not because of people that are buying stocks like you and me, because we continue to put money in the market. You can see that retail traders are buying a lot of stocks. It's because of the hedge funds that are playing the short game. They're worried about returns this quarter, this next year. They're really worried about the short term, and that's why they're moving money around from stocks back to treasuries. But if you look at a 5-year or 10-year return, the people that are buying stocks right now in crypto are probably going to vastly outperform the hedge funds, especially if they just buy and then they don't capitulate. That's going to be really important because, again, hedge funds have to think short term because they're worried about showing their kinds of returns versus the market or versus other hedge funds, and they have to keep money coming in or staying in their fund. That's what they're worried about, not necessarily growing, but hedging against a bad market, not really growing wealth a lot long term. They're there to preserve wealth for the most part. And then cash is key. Warren Buffett keeps a ton of cash, and he gets a hard time for it, but he put $40 billion into the market just this last quarter. And that's a significant part of the market cap. They're worth $600 billion. He put $40 billion into the market, so about 7% of the market cap. He also has about another 20% around. They have $100 billion plus right now, and they're getting cash flows constantly. So I think cash is key. I've been talking about that as well. I have a significant amount of cash too, so I can continue to buy into this market. I think it's also important to make sure that you're making a good amount of money. If you can make more money now, that's fantastic. Now is the best time to be trying to maybe move jobs to make more money. Of course, you have to worry about the labor market as well. Also, selling covered calls or cash secured puts is probably a good thing to learn right now as well. Like I said earlier, that can generate more cash for you. Now, this is a great time to be buying things that you like, things that you think will do well long term. If you're looking 5 or 10 years out, and I can see the demographics of this channel, I know that 90% of people probably aren't going to retire in the next few years, the people that are watching this channel. If you can look a few years out and buy and have conviction and continue to buy, you're going to be set up great. I guarantee you, people that bought during the crash of 2000 or 2008 or even in 2020 weren't sad that they bought during those times. A couple years later, they're really excited, right? Now, of course, you can't buy at the top. That's when you are really risking things, right? When you look back and when you bought at the peak for Bitcoin, or you bought at the peak of some SPAC craze or some growth stock phase, that is when you regret it. Not when the stocks were already down 50, 60, 70, 80%. Now, of course, they can always fall down further, which is why I like to dollar cost average in. That's why I want to focus on growing income and also having cash on the side. So it is kind of a balancing act, but I think we will get through this just fine, and we will come away with huge portfolios, huge gains years out. Just keep all this in mind. Thank you so much for watching. Again, check out Biswap underneath the video. And if you want some free stocks from moomoo, you can get up to 15 free stocks with a link underneath the video. Just read the terms and conditions for how much you have to deposit. Thank you so much. I appreciate it, and I'll see you in the next one. Bye.